Welcome back. Increased competition and weak consumer spend have continued to weigh on Italtile. This has resulted in a 7% decline in headline earnings per share to 123 cents. But shareholders are in for an extra payout. The group has declared a special dividend worth 78 cents. And join me now is company CEO Lance Foxcroft. Thank you so much for your time, Lance. Let's actually start there, because when I looked at your financial metrics, I saw flat turnover and then down facing arrows going down to the bottom line. But I started seeing upward facing arrows as I looked at the total dividend that more than doubled and the declaration of a special dividend. How and why now?
Good day, Zanati. Our balance sheet remains extremely strong, and our business is cash positive, generates a lot of cash through our retail operations. We're relatively ungeared, which means that our capital allocation strategy of either using the money productively to reinvest in the business or returning it to shareholders remains in place. For the last few years, we've been a little bit nervous around the economy, and we've decided to hold on to our cash. But we've reached a stage where at 1.8 billion, we're sitting on quite a large sum of money, and we don't necessarily see that we'll be able to invest that in the next year into new business, given the state of the capacity in the market. So we've decided to return by way of special dividend to the shareholders.
And that's the thing, because you talk about, being highly cash generative on the retail level. And I did also see your cash and cash equivalents there surging by more than 3/4. You mentioned the 1.8 billion. What drove that, considering the subdued building cycle that is still in a downturn?
Our top line remained relatively flat for the year, so still strong sales.
Okay.
Our margins have been under pressure slightly, but our business is still quite cash generative, and we have managed to sell some assets and reduce our inventory, which has added to the cash.
All right. Well, you talk about these margins that are under pressure, and of course that speaks to the lower demand that we're seeing, but also the significant shift that we've seen in that competitive landscape. And of course, where the fighting point is on price. So how far into the boxing ring is Italtile going to fight against the competitors and the smaller competitors that have come into the space even outside of South Africa?
Yeah, with our brands of CTM, Top 10, Italtile Retail, we are always competitive. We do have big savings for our customers, and we always make sure that we leverage our size, our purchasing power, as well as our vertically integrated manufacturing business and our supply businesses, to make sure that we have prices that our customers enjoy. And we will continue to look for opportunities to reduce costs in our manufacturing business, which will make sure that we can compete with the imports that are coming from the countries surrounding us at very low pricing at the moment.
Yeah. Well, I mean, Italtile talks about the predatory pricing that we're seeing in the space, but also the unsustainably low margins that could result in consolidation among players in the space. Would Italtile be keen to explore participation in a kind of consolidation in the space?
I think we are by far the largest player in the space, and as such, consolidation from a competition point of view would be very difficult for us. So we rather stick to our organic growth and focus internally on the levers that we can pull, and continue to make sure we can give the best shopping experience to our customers. Right product, right place, right time, with an amazing service. Our customers come to us to spend their hard-earned money, and we want to make sure that when they do come, they get a product of quality that will last them many years, unlike some of the products that are coming in. But still at an affordable and great deal price.
All right. I do also note that you've said you will be spending substantially lower CapEx for the year ahead. Talk to me just about your priorities and why that decision to reduce that CapEx spend in the year ahead.
Yes, as noted in our commentary, there's quite a few new factories opened in countries around us and some extra capacity within our country. So there's a great oversupply of ceramic tiles into the market at the moment. And to that end, we don't think we'll have any major CapEx in terms of opening new factories or building new sites. We will continue to open stores, predominantly
Okay.
in the top tier space, to make sure we are close to our customers. And we'll continue to invest in the latest technology out of factories to make sure we have the right technology to make new products and exciting products for our customers. But that is at a much lower rate than building a new factory. So really the reduction in CapEx spend is around not looking at a new factory at the moment, but
Okay.
rather consolidating the assets we have and making sure we extract value from the big investments we've made over the last few years.
We're talking about value extraction. A lot of South Africans hoping to extract some money from the two-pot retirement system in the short term. Lance, do you expect any boost from that release of money and I guess increase in liquidity in the market?
Yes, we do expect that customers will have a bit more disposable money once the two-pot system comes into play. I don't necessarily think it is the right thing to do for people to withdraw their salaries and spend it, but if they do withdraw it, your home is probably the best place to spend it because it is an investment that you can probably get back in the future. So we will be making sure around the time the two-pot money does come back into the economy that we have deals and we appeal to people to at least invest in an asset they can get returns from at a later date, being their home.
All right. Well, thank you so much for your time and giving us insights on those numbers that came out from Italtile early this morning, Lance. That was the CEO of Italtile, Lance Foxcroft.